Hi guys, welcome back to my channel and thank you so much for watching. If you're new here, please consider subscribing to my channel, and if you're a returning subscriber, thank you so much for coming back. I'm really excited about today's video because this video will be part of a series talking about property investment and investing in your first property. I really hope that if you're someone trying to get on the property ladder, that this video will be very helpful and will break down the steps involved in buying a property. Right. When you're thinking of buying a property, the first thing you need to do is open a dedicated account specifically for saving up for your house deposit. So you need to open an account that allows you to save money every month towards your house deposit. And ideally, I would recommend that you create a standing order so that this way you're able to automate the savings. So for instance, if you get paid on the 27th of every month, set up a standing order so that a specific amount goes straight towards the savings account for your house deposit the next day, so on the 28th of every month. And this way it means that you're dedicated to saving for your house deposit, and actually this money goes straight out of your account even before you start making any of your usual expenses for the month. I would highly recommend opening a lifetime individual savings account, so a lifetime ISA account, to help you save towards your house deposit. So what happens with a lifetime ISA account is that you put in money into this account specifically for buying your first home, or you can also use it for saving towards a pension. But basically you put money into your lifetime ISA account, and the government also gives you a 25% bonus. So for instance, if you put £4,000 into your lifetime ISA account, the government will give you £1,000 bonus, which will be 25% of the money that you've put into the account. So that way, you're able to save up for your house deposit a lot faster. Also, try and make sure that you have a savings goal in mind. So ideally, to buy your first property in the UK, it would be nice to have a 10% deposit of the property value. So if the property value was £200,000, you will need to save up at least £20,000, which will be 10% of the property value. And then the bank will lend you the remaining 90% of the property value to be able to get the house. You can still get some properties with only a 5% deposit, but it just means that the interest rate that they will give you will be a lot higher. And actually, earlier on this year, some lenders announced a 0% house deposit scheme, which means that you don't even need a deposit to be able to get a mortgage. However, they have set up stricter criteria for these mortgages. So I will always advise that you have at least a 10% house deposit when you're buying your first property. You will also need to think about other costs like the solicitor cost, the conveyancing cost, the cost of moving into your new home, the cost of refurbishment. So you need to make sure that you factor all these things in when you're thinking about how much you need to save up for your first property. And I know that it can take a long time to be able to save up for your first property. It took us quite some time to be able to save up for our first property. But it's definitely possible. It's definitely doable, guys. The next step you need to think about is your credit score. So start building your credit score. I've done a whole separate video on how to build your credit score and how to get a great credit score. So definitely check out that video, guys. I'll also try and link it to this video somewhere on the screen, so hopefully you'll be able to watch that video as well. But basically, you need to make sure that you're building your credit score, because the better your credit score, the better rates you can actually get when you're taking out your mortgage. A credit score can impact how much the lenders are willing to give you, and also what interest rates the lenders are willing to give you. So it's definitely important that you take time to start building your credit score. Don't wait until you're ready to buy a house. As soon as you know that you want to work towards getting your first property, start building your credit score. Also, another tip I'll give you here is, before you put in an application for your mortgage, make sure that you're not having too many credit checks on your file, because that will look like you're trying to borrow a lot of money at the same time. So ideally, try not to have too many credit checks done on your file within the 3 months before you apply for your mortgage. And also try not to move jobs within 3 months before you apply for your mortgage, because you need to be able to get all your pay slips and show that you can actually afford this mortgage before the lenders will actually approve it. So if you have just moved to a new job, you might not have all the pay slips that you need to be able to apply for the mortgage. I think you need to show about 3 to 6 months pay slips before you apply for this mortgage. So try not to move jobs just before you put in your mortgage application. So once you get your house deposit sorted and you get your credit score in check, the next step that you need to do is to apply for an agreement in principle. An agreement in principle is basically a written promise from the bank saying that they are willing to borrow you money. You can even get an agreement in principle online in less than 30 minutes, and it will just ask you about your income, your expenses, any other loans or debts you might be paying at the same time, how much deposit you're willing to put down for the house, and the repayment term that you want. And with all these different details, it will calculate how much the banks are willing to lend you. So this will give you an idea of the maximum property value you should be looking at. They will also be taking into account how long you want to take out the mortgage for, and any dependents or any children that you might have, as well as any current loans or any current debt that you have. And on average, lenders are willing to give you about 4 times your annual salary. So for instance, if your annual salary is £30,000 a year, lenders will be willing to lend you £120,000 for your mortgage. So you can then add this £120,000 to the house deposit that you've saved up, and that will give you the maximum property value that you can go for. Also, if you're buying a property with a partner, the bank will be looking at your combined income, so your income plus your partner's income, and then they will times that by 4 to decide the maximum amount they can lend you. If you have any existing debt or any existing loan that you've borrowed, ideally it would be good to pay off that loan or pay off that existing debt, because the banks will actually take this into account, and actually having existing borrowing can reduce the amount that the lenders are willing to give you for a mortgage. So if you have existing loans, ideally I would advise that you try and pay those off to be able to get better rates, and also to be able to borrow more for your mortgage. So once you save up for your house deposit, build your credit score, you have your agreement in principle, the next step is to start viewing properties, which is the exciting part. Some estate agents will actually ask for your agreement in principle before they can actually let you start viewing properties. By this point, you will know the maximum property value that you'll be looking at. So you need to decide on the location you want to buy. You need to think of the kind of house that you want to buy. Do you want a semi-detached house, or a bungalow, or a flat? So you also be thinking about the area. If you've got children, you also be thinking about the schools around the area, the amenities around the area, the transport links. So all these factors will go into the type of house that you choose to buy. But it's definitely an exciting stage. Try and view as many properties as you can, because that will give you an idea of what's currently on the market and the properties that you can actually get. Also, when you're viewing properties, I would definitely advise you to keep an open mind, because you might see some properties that might not have 100% of everything that you want, but you love this property so much and you might end up going for it. So use sites like Zoopla, Rightmove to compare different properties and to be able to look out for properties in the areas that you want. Look at things like the crime rates in the area, look at transport links. All these different factors will determine the kind of property that you end up buying. Take your time to find the best property that you would like, because at the end of the day, you're going to have this property for a long time. So you need to take your time to make sure that you make the best choice. So once you found the property that you would like, the next step is to make an offer. So every property that you view would have an asking price or a guide price that gives you a rough estimate of what the sellers and what the estate agent think this property is worth. But then you have to then do your own research and decide how much you're willing to pay for this property. You don't have to offer the asking price. You can offer less than the amount that they're asking for, or you can offer more than the amount that they're asking for. It all depends on factors like how much you're willing to pay for the property, how much you can afford to pay. Also think about other things like renovation costs that can impact the value of the property. One tip I will give you here is to look at sites like Zoopla and Rightmove and look at how much similar properties have sold for in the area recently, and that will give you an idea of how much the property is actually worth. It all depends on the demand in the market, how much you're willing to pay, and how motivated the seller is to sell the property. But what we did when we were buying our first property is that we put in an amount that was less than the asking price, and then we had to negotiate with the seller to be able to get the final price. But it's definitely an exciting process. The next step will be to start getting other people involved in the house buying process. So by that, I mean you need to get your mortgage broker involved, you need to get your solicitor and your conveyancing team involved, and they will help you get all the paperwork sorted for this property. I would definitely advise that you use a mortgage broker, because your mortgage broker can look at all the different lenders available to you. They can compare the different interest rates and the different repayment term, and they'll be able to find you the best mortgage deal that suits your needs. You then have to involve your solicitor, who will do all the legal work and all the paperwork for you, as well as the conveyancing team. So the job of the conveyancing team is to look at any structural defects that the property may have, any building regulations that applies to the property. They look at the surveys, they look at building regulation, building checks that are involved in buying a property. They also look at the area, so if the area has any flooding issues or any regulation that can affect the value of the property, they look at all these checks to make sure that everything is right before you buy the property. So it's a very important step that you cannot skip when you're buying your property. Then at this point, you need to start getting all your paperwork together. So your payslip, your proof of identification, all the paperwork has to be submitted at this point to be able to put in your mortgage application and to be able to do all the legal work necessary to buy your house. You can decide to go for a fixed term mortgage. So a fixed term mortgage means that you have the same fixed interest rate for a specific period of time, usually 2 years or 5 years. Or tracker mortgage, which would mean that your interest rate will fluctuate depending on the Bank of England's interest rate and your lender's terms and conditions. When we took out our mortgage, we took out a fixed rate mortgage because we wanted to know exactly how much we'll be spending on the mortgage repayment every month, which I think is a lot better than having a standard variable rate mortgage or a tracker mortgage. Don't forget there will usually be an additional fee for your mortgage broker, your solicitor, and your conveyancing team. So definitely take that into consideration when you're saving to buy a house. The mortgage broker, the solicitors, and the conveyancing team will send you a lot of paperwork that you need to sign as part of this process. And it can be quite a lengthy process. Sometimes it can take up to 8 weeks or more to get everything sorted. But once all these things are done, at the end, you'll get your property, and that's all that matters. As soon as your mortgage application is approved, all the legal paperwork has been signed, and all the surveys and checks have come back satisfactory, then you can move on to the next step, which would be to transfer funds. So you transfer all the money to your solicitor, who will then get everything sorted for you, and then you can exchange contract. Exchanging contract simply means that there's now a legally binding agreement between you and the seller for that property. It means that you are now legally responsible for that property. So as soon as all the payments have been sorted, you've exchanged contract, then you can decide on a completion date and then a date to move into the property. The completion date basically means the date that the property is fully vacant and ready for you to take over. So ideally, your legal team will ask you what date you want to complete and move into the property. And you can then decide with the seller what date you want to complete and legally own the property. So once all the paperwork have been sorted, you've exchanged contracts, you've decided on your completion date, the next step is to move into your property. So you go to the estate agent, you get your keys, and the property fully becomes yours. This is the most exciting part of the whole process because it's almost like everything you work hard for has finally come to pass. I can still remember the days we got the keys for our property. It was exciting. It was so nice to see that something you worked so hard for all these years has finally come to pass. And to be honest, if you're someone looking to get on the property ladder, I know that it can take a long time to be able to save for a house deposit, to be able to meet all the criteria and get all the paperwork sorted. But once you get to that point where you get the keys, to be honest, none of that actually matters. You just enjoy the process. You just look back and think that it was definitely worth it. Everything actually worked out. And that's the end of this video, guys. Thank you so much for watching. If you're someone looking to get on the property ladder, I know that it's a lot harder now to get on the property ladder than it was many years ago, but it's still doable. I'm hoping to do more videos like this relating to buying your first property in the UK. So if that's something you're interested in, please hit the subscribe button. Leave comments below actually. Let me know, how did you find the house buying process? And if you're currently in this process, what stage are you at? And how are you finding it so far? Thank you so much for watching. I'll see you in the next video. Take care. Bye-bye.